So 352.9%, that goes without saying. What's going on, everybody? It's Ryan here, CEO and head quant at Happy Trader. It's Thursday, February 15th, 2024, and today's video is going to be a very exciting one because not only are we doing a small account challenge, we're doing the back test for this year. So from January to February 2024. So we're using a really small account size of $500, which almost anybody can afford. Theoretically speaking, of course, and this is not financial advice. Any reference to you, any reference to what you should do is not to be taken literally. This is all for educational purposes. And without further ado, let's get into the back test. We're going to be looking at the Micro Nasdaq. This is going to be the MNQ. So this is going to be the Micro E-mini Nasdaq 100 Index Futures, otherwise known as the 1/10 the size of the NQ contract, otherwise known as trading big tech. So this index moves a lot more than the ES moves. So you can see, today in the market, the Nasdaq's the laggard, okay? But that's not usually the case. Typically, the Nasdaq is leading the way, but today we have the SPX, the S&P 500, and the Dow Jones Industrial Average leading the charge. Now, that's, again, not typical because the Nasdaq is only a basket of 100 stocks, where the S&P 500 is a basket of 500. So what would happen if we took $500 just in January and we traded our happytrader.io sentiment AI with a Luma trend strategy? Now you see it, now you don't, and now you see it again. We're going to be looking at the long only and the long and the short. And to make matters even more fun and just more simple, and our objective is going to be to accomplish substantial market beating gains using leverage, small amounts of leverage on the MNQ, because it's only 1/10 the size of the NASDAQ, like I already mentioned. But we're using the best of all worlds, a long time frame, a small starting account size. We're using a small trading instrument. So this is all small time stuff. Now, I'm going to preface this by letting you know that Happy Trader really tests well on the index funds, on the ETFs, and especially on the futures. So that's going to be a reason for you to hang around for this video, because this is going to be something that's jaw-dropping. There's a couple gems that I'm going to be dropping in this video besides the actual back test. So just stay tuned and we're going to get into it. Without further ado, we're going to start with the long and the short. So let's go ahead and we have our Happy Trader Sentiment AI with a Luma trend enabled. We're going to take our long and our short. We're going to make sure it superimposes directly over our chart. So essentially, we're going to be buying AI. So we're going to take our AI signal on the uptrend signal, and you can get those just by setting alerts on happytrader.io. And we're going to be closing that buy AI and then also selling an AI. You can see it up here, and we're going to be selling a contract. So we're going to go long, we're going to cover that long on the downtrend signal, and then we're going to go short. So we're going to be doing both directions. Then we're going to do a back test that's long only, and we know how the market's been behaving lately. So that should give you a little bit of a clue of what we're about to be looking at. So this is going to be the most rudimentary back test. A lot of folks like to take their profits prior to, just letting signals roll. But you can see that, we're not super trend like I say in a lot of other videos. We are built on a shell that is similar to free indicators on TradingView, but all of our special sauce is baked into our downtrend and our uptrend signals. Let me also drop this nugget. 7 to 11% per year is going to be about as good as it gets for holding the S&P 500, barring if the market crashes, barring, correction recoveries, that type of thing. But per annum, just on average, that's going to be what you're looking at. So let's get into the first back test, the long and the short. Enough chit chat. We have Happy Trader up. We have our strategy superimposed. And now we're going to get into our deep back tester. We have our dates preset. So from January 1st to, we're going to change this to the 15th. Today is Thursday, February 15th, 2024. So now we have to get into our small account size. Let's set 500. Typically speaking, the margin is going to be no more than $500 for one micro Nasdaq contract trading intraday. If you're holding overnight, it's going to be a little bit more. So if you're not aware of that, now you're going to know. So we're going to start out with $500 in initial capital, and we'll be able to see if we have a drawdown and maybe should have padded that account with 2 or 3 grand. And commissions and slippage, we're going to leave that out, and you're going to see why in a moment, because we're just not going to have that many trades on the 45-minute chart. So we have everything in. We're going to be trading just one contract, so 1/10 the size of the regular NQ. We're going to hit OK. We have our deep back testing enabled. That's going to enable time testing. We're going to go ahead and just confirm that everything's right. So we're going to have a month and a half that we're looking at here. We're going to be using the long and short strategy. We're going to be making sure our overlays are in place. They are for our strategy tester, and we're only back testing off of these downtrend and uptrend signals going back on the 45-minute chart for the last month and a half. So that's going to be exactly what we're going to be looking at from January 1st all the way to today, February 15th. So let's go ahead and generate the report. Just one final look. Okay, we are good to go. And we'll generate our report and we're going to analyze it. So you can see some obvious things in the report. Something I'm noticing that's very interesting for this being a long and a short type of back test. Well, yeah, we have this big drawdown right here, and that put us down, to like 424, no big deal. Maybe pad the account with like $1,000 extra or just paper trade, and you don't have to worry about that. But we did have a drawdown of 57%. It's to be expected when you're trying to short a market that's really going straight up. So you can see that, you had a lot of these peaks here. You had opportunities to take profit up here. You had opportunities to take profit here. You're never going to take profit in the perfect zone. And that's why we're just back testing from signal to signal. We're not coming up with an arbitrary way or method of taking profit. Now, if we go into the total closed trades, 12 trades, not too bad for a month and a half on the 45-minute chart, just getting alerts on your phone and being able to trade. Now, percent profitable, a little higher than we're used to having. The drawdown, yes, you're going to get that drawdown when the market's going up and you're going short. Now, a lot of folks talk about the win rate, and I say this in so many of our backtesting videos. Percent profitable and win rate don't matter. It's about your expectancy, and I'm going to show you why. You can see our average trade expectancy is $88. So average number of 45-minute bars in the trade, 71. That's really low maintenance. And then we're going to go to the actual trade log. So that's what we're going to look at. We're going to start out. We're going to see that these winners are going to outsize our losers, which is why we can get away with that win rate. So we might have streaks that are larger of the losers, but our winners are going to be substantially bigger than our losers trading on this small one contract. Now, something else that I love to point out, and this is a really big important gem, when you're going long and short and you just don't have patience and you want to take your trades both directions, you want to take all the signals all the time, well, you have the opportunity in many cases to have a run up where you're able to take profit even on the losing trade. So going signal to signal might be a losing trade, but hey, a lot of folks take profit early. There's nothing wrong with taking profit early, and as the saying goes, nobody went broke taking profit. So that's going to be the name of the game there. You can see that there's ample opportunity. This one's really just going to be a losing trade, not much of a run up. The opportunity to salvage that trade was there through whether through hedging, protective puts, inversing, delta hedging, whatever you want to call it, or going into a trade like this where you're about double the expectancy on the run up as you were on the actual result of the trade. Now, you can also see the same thing on some of the winning trades, right? So you can see that on this $1,100 winner, we also had the opportunity to take profit at $1,700. Now it's, kind of impossible to time the market, but if you're going from signal to signal, it makes it kind of easy, but that's how we backtest. That's not how we're telling you to trade happytrader.io. Otherwise, you're going to run into these drawdowns and your psychology in your head is going to get in the way of probabilities playing out. So really want to dig into that. Now, the next thing we're going to do is look at the long only. So we can see 211% in a month and a half. I mean, not too shabby. The market does 7 to 11% per year in most cases, compounding, right? So we're not even compounding. We're just using a little bit of leverage, and we're going to go ahead and turn on the long only strategy. And we're going to make sure our date range is the same. Deep back testing is on. First thing we want to do is make sure that our back test is set up properly. We have our buy AI superimposed, and we only have, in this case, contrary to the long and the short, we just are closing the buy signal. So we're taking our uptrend, closing on the downtrend, taking uptrend, closing downtrend. That's all we're doing on this back test. So we're going to go into the strategy tester. We're going to set the same parameters. Let's go ahead and set a $500 measly, one contract on the micros, about as small as you can possibly trade, right? And we're not going to pyramid orders. That means two or more orders in one direction, one contract. Commission and slippage really not going to matter because you'll see why, just like you saw in the last back test. And we're going to be going with the market this time. So let's see if we get a better result. And let's go ahead and generate the report. And you can see just a much more palatable drawdown right here. And you can see the percent profitable. Wow, that's probably the highest percent profitable we've seen on a back test. So if you're a win rate person, this is going to be like the end all be all. This is about as good as a back test can get for a small account size for swing trading. You have your average trade expectancy on the long only at $294 and your average number of bars in trade at 97 bars. That's absurd. So 352.9%, that goes without saying. But what's really important is the amount of closed trades and the fact that we never dipped down. Our head never fell below water. We stayed above water the entire time, mechanically trading from signal to signal. And again, some people like to take profit kind of when we're running up. They might take profit here instead of maybe just waiting till here and then going down. Some folks might take profit along this ridge or along this ridge. Some people have diamond hands and they will hold no matter what. But I want to point out 6 trades, 45-minute chart, Micro Nasdaq, very, very low maintenance, okay? Extremely smart way to beat the market. Absolutely crushes any hedge fund out there. Absolutely destroys, as far as having to sit in front of your computer and monitor. You're just getting happy trader signals on your phone, your computer, you're hearing horn sounds, whatever. You can set up these alerts in many different ways, and you can set up your alert notifications even via webhook. If you're a big baller and you do some quantitative trading and you want something else to tie in, that's going to help you confirm your trading thesis. This is going to be a great idea, and it is within the realm of possibility. So for a month and a half back test, pretty awesome stuff. 6 trades. We go to the list of the trades. Will be the last thing we do. You can see that our winners, again, they outpace and out crush. They crush our losers, right? And we had a small winner there. We had a small winner here. But you can see in general, again, on these losers, you had a chance for a run up. So if you're a conservative trader and you like to take profit early, Happy Trader's perfect for you. So just putting that one out there, winky wink. So that's going to be really what it is as far as the trade log. You can just see that some of these winners are just really stand out, huge winners. We have our 398 there and then like 1100 on one micro NQ contract. That would have been an $11,000 trade on a full size NASDAQ contract. So, do the math there. And if we just look at the equity curve as far as dollars, you can see that we went from 500 up, above 2200. Come on, a month and a half. That's what some people make for an income. So that's one contract. Imagine if you scaled up. So that's going to be today's really exciting backtest. My name's Ryan from happytrader.io, CEO and head quant. Have a great day and happy trading. Hope this helped you out in some way.